Morning all, how we doing? Morning Stevie, morning Mio. Morning. This sounds okay. Right, so I just got back from my spin class, so it's always a bit of a manic Thursday morning. I'm always a little bit late and completely unorganised. It's not like me, obviously. So, let's kick off with news this morning. So we've got German IFO business climate this morning in the ECB monetary meeting minutes. So nothing much this morning. Might get something off of ECB, unlikely. It's kind of no news really. So I don't think we're going to get any movement too much this morning on any of that. Main thing today we've got is GDP for the US dollar. And Jackson Hole starts today as well. So GDP is a very hit and miss news event. We sometimes get some movement off of it. Most of the time we don't. We get a little bit of whipsawing. So if you're trading very small time frames like M1 or something, you'll get some action off of it. But normally we don't get a great deal. GDP is a figure that is derived from monetary policy. It's not a leading indicator, so it's a result of monetary policy, and it doesn't impact monetary policy really. But sometimes it comes out really different, and you do get some big changes. So, but the GDP is pretty static at the moment. We're forecasting 0.7, so hardly any change at all. So I don't think we're going to get much movement off it, but we will see. You never know. And then we got OR speaking overnight for New Zealand. So no overnight news. So the only other news we got is PCE and Powell tomorrow. So all US based really for the rest of this week. We'll see what happens with those, but nothing dramatic. Morning David, morning Timber, morning Sammy. Hello guys, I don't think I'll be able to be with you today. You are? I'm just saying good morning. Okay. Cool. No problem. Right, so you can always watch the replay, don't forget. Okay, so that's news covered. Overnight news. I haven't had a chance to look at anything. GDP for Germany, bigger than expected. German economy is growing a little bit. Korea. PPI for yen is down, negative yen. Not a lot else. So no overnight news. That's good. Nothing to worry about there. Okay, so that's news. I'll start off with my Forex funds account, which I'm about to blow, basically. Don't think it's going to work. This Aussie dollar Swiss is killing me. So yesterday I closed out 0.78% on, what did I close that out on? What's yesterday? What was yesterday? 24th. So I had a little Aussie New Zealand, which is a tiny little profit there, which I took off and went flat on. It pulled back down hard. So as this candle here. So we put this big sort of reversal in. Basically I put a trailer on it and it got stopped out. So it spiked down then and we've pushed up this morning, but I got out of that because the idea was yesterday I was on 6.88% yesterday. So the idea was to start whittling down some of these which have got very small profits on. I didn't want to let them go into drawdown, so they either moved the break even or had trading stops put on, basically to get out of them. And I've turned the EA off on these. So Aussie New Zealand is now EA free. It's not. I'm not trading it anymore. The idea being that I was just going to manage the final positions and do aggressive drawdown control to get out of those positions and go flat. And hopefully hit the target. Pound CAD, little one there as well. Just short. That's dropping a little bit more this morning, but same story with that one. Just wanted to get out of it to get flat. Euro US dollar. What the hell? Euro US dollar sell. Okay. Ah, connection. I've lost connection then. That's right. I was thinking, what the hell? So that one there, Euro US dollar got out. That's a nice exit. Euro pushed on news yesterday. Well, speculation. Aussie dollar Swiss closed that one out. That was an aggressive drawdown control position, which I closed out really nicely before the push. And as you can see this morning, we've pushed up. So that's the closes yesterday. I had aggressive drawdown control positions that I put on yesterday, 0.75s here. So the idea was my stops on these were here, as you can see, which is exactly where I stopped out. I was looking for basically them to come and run the highs and then dump. It basically just accumulated since I put those two on. So basically price was in the middle here. It was just taking out the Asian highs. So the idea was if it dropped, I got in and it went, or it was going to come up and take out the Asian high. So I had an entry just below the Asian high. So I wanted two good aggressive positions on to try and get basically flat on this. And obviously it didn't, it pumped. So it's pumped. So what I've done this morning, and that's why I've got this loss this morning, 0.73, which has put me back to 6.2%, which means that I've now really got to work these. But obviously Aussie Swiss is pushing at the moment. So oil I've got on as a long, that's come down this morning. US dollar Swiss I've got on as a short, which is dropping very nicely. DAX is pumping, so that's going into drawdown. Pound New Zealand and Swiss yen are virtually nothing, but this is obviously the main issue that I've got, Aussie dollar Swiss. So plan today with the Aussie dollar Swiss is, did that just take me out this morning? It's those two. I thought I had another position on this morning. Oh yeah, that's what I was right. Okay. So 0.9 sell I've got on, which is an aggressive position. So I went off to my spin class this morning. So before I went, I put a 0.9 on basically here, which is half of, well, it was half of this morning, my lot size. So this was 1.8 something this morning. Put a 0.9 on, which is a half. And then I've got another sell stop down here and another sell stop down here. So it's basically, you know, crap or bust today on this account. So I'm looking basically for a down day on the Aussie and a pump on the Swiss to try and get back down to these lows. So the plan is to trade these down to some lows, bank some profits. So that position there will get rid of this loss. And then the other positions I've got on will be aimed to get me out of the drawdown that I'm in at the moment. Morning, Jam. I've got to deal with these other positions as well. So Swiss yen I'm not worried about. New Zealand I'm not really worried about. So the DAX I need to deal with as well. We've almost done an ADR this morning, and the market's not even open yet. Seven. So I'm going to put an aggressive one on there on a break of that low. So looking basically for the reversal and then a drop on that one on the DAX. Everything else is okay at the moment. US dollar Swiss I can bank a bit on. I'm going to bank that US dollar Swiss. Actually, I'm not going to bank it because we're at a resistance. So we've got this resistance here that we're just tapping into at the moment and this propulsion gap. So I'm going to give it the benefit of the doubt and give it a 70 pip trailer. So trailing the propulsion gap, basically. So if this one continues to tank today, obviously I'll just keep that, get me out of that one, which is this position here. And oil. I'm going to trail oil at break even. So just put a break even on it and I will trail as it moves. If it moves, if it doesn't move, I'll get out and get flat. So I was just trying to limit this, limit the risk down because I've lost 0.73 this morning. I've got a 5% limit. So that 3.5 plus that 0.7, I'm literally 0.7 away from blow. So crap or bust seems like there should be another option. This is the problem with prop firms. There is no other option, is there? If I hit 5%, right, so what I could do is not take that aggressive drawdown control position and cross my fingers, hope and pray that the Aussie dollar Swiss doesn't push. If the Aussie dollar Swiss pushes today, I'm bust anyway. So I might as well go aggressive and try and get out of it today rather than eking it out for a couple of days. But you know, this is what I keep saying about the prop firm accounts. When you take your evaluation, you're either going to have a lucky one or you're not. There's nothing you can do about it. You either are going to have a losing run or a winning run. The market decides, you don't. So if I hadn't have picked to trade Aussie Swiss on this, I'd be laughing all the way to the bank, wouldn't I? But I did pick Aussie Swiss, and it's squeezed. So we'll see. But anyway, so we'll see what happens with that. This 3.5%, as you've seen many times before, this can turn into 3.5% profit within 8 hours. So, you know, it's all hinging on Aussie Swiss for the prop account, basically. So, lovely rejection there, which is good. In fact, I should really take one now. I'm going to wait for the market structures to shift. Make this. I've got that one on already anyway. So, what I might do. I might move that other aggressive position up. So I've got two very close to each other there. If that triggers, then my average is going to jump up to here, which will get me out very quick this afternoon. But anyway, we will see what happens on that one. Not a lot I can do about it in a minute. Main account, banked nothing yesterday. Couldn't get anything yesterday. Market was just flat as a pancake. Where everything that I was on was flat as a pancake. So all I managed to do yesterday was get out of oil. So oil yesterday, I can't see them. So these here, these are older positions basically. I closed them out. We had the oil inventories come out at negative 3.3 yesterday, which was here, and oil basically dropped, and I was like, well, that's weird, it's negative. So less supply, demand increasing, that should be positive for oil prices. And then it basically screamed up, so I thought, it's done a liquidity run. It flew up there, and then it got up to there, didn't get up to that high, and then collapsed. And I thought, oh right, okay, fine, that's weird. Took out the liquidity there, and then it screamed back up again. And I was like, and it took out the liquidity there and there. And I was like, right, okay. I've never seen this price action before on oil, especially on numbers. And then it started to collapse again. And as soon as it got down to here, I was like, right, I'm not interested in this anymore. And I put a break-even stop on it. And as soon as I did that, obviously it pumped. But that was very, very weird price action. And I don't know why. So, you know, you probably know if you've been in there for a while, if I'm unsure, I don't do it. And I had no idea why oil was acting like that, so I got out. Just in case it tanked for some reason. Something going on. Russia announced yesterday as well that they were potentially going to cap the price of their oil exports, which is, I think, a sort of half-assed attempt to entice sanction restrictions on oil. And basically, you know, come on guys, let's have some of our oil, we'll sell it to you cheap type thing. And if that does happen, we're going to get oil drop in price. So this yesterday was all a bit like, really don't know what's going on. It made me uncomfortable, so I got out. So I put a little tiny order above this high, because if this was just some weird whippy price action and some don't know, whatever it was going to just correct itself, and we're going to get the continuation on oil, which I'm expecting. I wanted to get in again, so I was only going to get in with a small position, and then the reversal triggered as well, and I got in on a long, which I think was there. Got a reversal alert. It triggered by the EA this morning, so I'm in long again, and it's coming down. But really unsure as to what all this was yesterday. Very, very weird on oil. DAX. Why did I get out of that? DAX. Oh yeah, that was my break even on DAX. So the DAX, basically, I moved it to break even yesterday because the DAX has kind of stalled a little bit. If you look at it on a higher time frame, we had this big drop for a few days. I think we probably need a pullback, and we've got a couple of gap fills to do. So I think we're probably due a little bit of a pullback on the DAX. And since we pushed up previously, we went nowhere. We had a bit of a sideways, bit of a rotation day. So I thought, oh, if we are going to start the pullback, I've only got one position on it. I'll put it to break even. If it does pull back, then I won't be in it, which is fine. If it continues and it drops, that position will obviously just go into profit. So I put that to break even, and we gapped up this morning, and I got stopped out on that one. So that's why I've got a tiny loss in there today. EA's got me into another position though, because we just had a reversal alert on M5. So I've just got into one this morning, which is actually quite nice because we've got this gap fill to the downside to do now. So as far as the DAX is concerned, we are gap heavy. We've got two gaps to fill to the upside. We've got one from the Monday swap over. We've got one from, sorry, that's the Monday swap over. We've got one from last week. So potentially we're going to push, but equally we've got a gap fill to do today. So going to keep an eye on DAX. What I'm going to do is I'm probably going to take this one off if the gap fill gets done. To what I'm looking for them to do potentially is get that gap fill done. If they push up, then I will be scaling in. It's not a massive scaling because it's only going to be sort of around about 1.5 ADR. So it's not the end of the world. So if it pushes up to there, I'll be scaling in on the way up. Aussie dollar Swiss pumping up hard, is it? Oh dear. So what's that? 0.45 away from stop out on it. We're getting close, getting close. We could stop out live on air. So that gets to 4.27. That'll stop out. I haven't got my tablet with me. I can put that on my monitor. Anyway, we'll see. We'll monitor Aussie Swiss. You watch this now. We'll just go, and I'll hit target within about an hour. So what I've got on at the moment is Euro New Zealand. Euro New Zealand short. We're just sticking. Look at that horrible price action. Look at that. Yuck. So you got Euro New Zealand, which I've just got the one position, start position on there. Pound Swiss. I've got one on that one as a short. God, look at these wicks this morning. It's awful. Horrible price action. US dollar Swiss. I've got 4 positions on. I've got 2 about to TP. It's going to do that horrible thing where it just misses your TP, isn't it? So I've got TP set at this low. Looking for them to come down and take out yesterday's low. Would make sense to come and take previous day's low, but that's going to be ADR. So I'm not getting greedy on this at the minute. In fact, I should really go for ADR, shouldn't I? That would be the logical thing to do. Would make sense. So those 2 positions there will be coming off at ADR. And then I will have 2 more on, that one and that one, which I'm going to keep and obviously just target somewhere lower down, US dollar Swiss. And what else have I got on? That little bit of oil, which I've just taken this morning, and the DAX, which I've got 1 on, which is a new position as well. So I've got some exposure on, but nothing. Why not close the trade in loss and reduce some drawdown? Yeah, could do. It's not going to help. I mean, all if I close this out, for example, and put that over there, that's going to put me in $800 loss there. It's not going to affect that, is it? It's going to affect the speed of my drawdown slightly by 0.3 lots. If it goes up, doing that has no effect. If it goes up, I'm still going to go into drawdown and still hit the drawdown limit. I'll just hit it maybe 15, 20 pips later, taking one position off. I mean, I could take off 2 or 3 positions. Yeah. I could do. But this is the thing with these evaluations. I would rather, personally, this is my situation, obviously, everybody's in a different situation, but this has cost me $300 to do this account. I would rather take a shot at aggressive drawdown control than spend another 30 days doing this. I'd rather that happen today and me hit and be done with it than have to spend another $300 in 30 days. I only did this as a sort of, let's see if we can position trade it. I know I can't position trade it because I've position traded accounts about 10 times and it doesn't work. I'm just trying to do it because everybody keeps asking me about it. But it's very, very, very hard because you can't, this 5%, it's very, very difficult to stay in 5%. The whole point of position trading is you're using your account to put risk and exposure on. Risk and exposure is impossible to keep below 5%. Well, it's not impossible, it's doable. You know, you could go half sizes on it. I could definitely do it. I could definitely do it if I dropped my lot sizes down. It just wouldn't do it within 30 days, which means I'd need to get an extension. And I can't be bothered to sit there for 60 days just to get a 50k account, which I'm probably not going to be able to trade position anyway, because I've already got a 100k funded account. You know, it's just, for me at the moment, it's just, I just want to pass it or blow it and move on. It's probably the wrong attitude, I know. But Aussie dollar Swiss, you know, it's going to take literally 2 4-hour candles and a 1 ADR push, and the account's passed. When you're that close, knocking those 2 off and putting them over there, and then that happening will take me to something like 6%, and then I won't have enough exposure on to actually pass the account. So we'll see. It's more fun watching it blow, I think. Anyway, we'll see. Right. So that's where I am position wise. It's nothing really. The only thing I can grab today, I think, at the moment, based on price action, is US dollar Swiss, if that continues. But it's difficult to know what's going to happen today because we've got very few news catalysts today. So we will see. But from an analysis perspective, if there's anything you want me to look at, let me know. I'm not going to do a full rundown of everything. I did that yesterday. I'll do it again tomorrow. Yesterday's price action was very light. So a lot of what I said yesterday is still the same, basically. We might not have the extensions on the RSIs and things, but nothing's really moved. You can see how much of a lightweight week we're having. We've got no weekly ranges hit. We're on Thursday. Nothing's even hit its weekly range yet. It's a really, really lackluster week. So Aussie dollar CAD is an ADR hit already this morning. Big strong push, we know that. Aussie dollar's pushing. Aussie dollar US dollar has also hit ADR. So that's the good thing we've also got going for us with this Aussie dollar Swiss. The Aussie dollar has pumped off the back of, I think there was that New Zealand news, wasn't there, last night? Yeah, retail sales, negative. again, negative figures for the New Zealand dollar, so it pumps the Aussie and the New Zealand. So we've had that pump, so we've hit ADR, so the Aussie's knackered already. So there's a good probability that we're not going to go too much further this morning. We may well push back down again from where we are because we've hit ADR on the Aussie. So we will see. I spend the coin on Aussie dollar Swiss is going down. Oh, that's good. Yeah, let's do a coin flip. Tails, it's going down. Oh no, let's flip it again. Oh, it's not good, is it? Doesn't bode well. The magic coin thinks it's going up. Might be in trouble this morning. Yeah, so big push up. Aussie CAD, ADR, Aussie US, ADR. So these two, from a long-term perspective, they're very difficult at the moment. The Canadian dollar strength isn't there because we're not getting this pump on oil, and we've got there's a lot of weird stuff going on with oil, and it's affecting the CAD. We're not getting the strength on the oil that I was expecting to get, so the CAD's a little bit weak. We've had a strong Aussie dollar. I like this short though, Aussie dollar CAD based on the Canadian dollar. I'm expecting to strengthen up. We have this lovely reversal alert, which we're just putting back up into. So this is a nice short Aussie CAD. In fact, might take that. Why can't I connect to my VPS? Okay. So again, short Aussie CAD on the ADR hit. And what number we're on? 20s, I think. 1920. Blimey, the VPS is really slow this morning. Maggie. 22. So taking the next reversal at short Aussie CAD. Yeah, so like that one, we're up at ADR. Nice end pattern. Potentially forming a reversal that will give us that nice end pattern reversal. And it's not extended on the 4 hour, not extended, it's almost extended on the hour. But we've got this nice little liquidity run, which is potentially going on. Next stop, there's a few to the upside. Difficult to pick a level there, but somewhere around there. Let's use the higher one because then we've got a bit more spacing. So we've got this level here, which is just over 175 ADR. That's an obvious potential resistance, which is just there. So if it doesn't turn from here, then obviously we've got a couple of levels potentially for that bounce to happen higher up. There's no real trend on the daily at the moment. It's more bearish than bullish, but obviously at the moment we've got a lot of chop, bit of price discovery. Weren't interested. We're back into sort of a balance again here. So good chance of a drop, but we need some Canadian dollar strength on that one. So I like that one. Aussie CAD short. Aussie US. Really unsure on this US dollar still at the moment. I kind of want to see what happens off the back of the GDP figures. The US dollar's floating all over the place. So yeah, it's all a bit weird. Aussie Swiss just hit weekly range, is it? I'm 50 pips off weekly range. Oh no, Aussie Swiss, sorry. 141, yeah, 3 pips off. It's weekly. So that'll be the first thing to hit this week by the looks of things. Yeah, I mean, if you look at, remember what I said about these levels on this one, that we've been gradually putting in lower highs on this, and we've been gradually putting in lower lows. So remember I was saying when I got into this position, the market structure on this is ever so slightly bearish, but it's more range bound, which would indicate if this range is going to hold, this is the final point on this one. It's whether or not they're going to come and take this liquidity. And the annoying thing is, if they come and take this liquidity this morning, it's going to blow my account. If they take that liquidity and drop, bleh. But that's it. That's what happens, unfortunately. So we'll see. It gets up to there. This morning, we're going to be in a bit of trouble with it. So there's those two. So those are your only ADRs so far this morning. Keep an eye on your Aussie pairs. And the New Zealand pairs obviously have been pushing off the back of the New Zealand news as well, which was negative. So, you know, why is it pushing up? Who knows? It's just manipulation. So just keep an eye on your New Zealand and Aussie pairs. You might get some other ADR hits on these this morning. We've got some liquidity areas they might reach for a bit later on. So apart from that, there's nothing else on the ADRs. Hourlies, we've got obviously Aussie Swiss. So Aussie Swiss is extended on the hourly. We're up at that level of interest here, so good level to get in with aggressive if you're in it. Only just extended on the hourly, but we are kind of getting embedded up here. There's no divergence really. It's not. It's a bit bearish divergence, but you know, you really want bearish divergence like that. So. But you can see that it's getting to a point where it is starting to peter out and starting to run out of steam. So there's a very good chance of getting that reversal today. But let's see, it depends how far they want to push it above. Morning Shalk. Aussie Yen, it's extended to the upside, as is Aussie Dollar New Zealand. So Aussie New Zealand, I'm looking for longs on this one. Remember I said I don't want to mean revert this up here. I'm looking for long opportunities. I didn't want to take it short. It's pushed higher. It's got out of this zone. So if this is going to be a liquidity run on this high, we're looking for roughly half an ADR push at the top, which is 26. So somewhere up there. So if we get a push sort of up to this sort of level, and then it starts to look like it's running out of steam, which won't be too far from ADR, that might be a good entry short, very extended. So yeah, like Aussie New Zealand for short, but I'm personally biased long on this, so I'm looking really for it to pull back into the lows. These are the areas that I'm interested in getting in, and really looking for the daily 24 bounce, which is down here. This is where I'm more interested in getting in, somewhere around there. So not really interested in that one as a short, much more as a long. Aussie Yen, the yen obviously, yeah, the yen is weak again. We had weak news. They don't put everything from the yen in red, but their PPI, yeah, sorry, it was PPI. PPI figures came out slightly worse. Not really. I mean, it's pretty much average, but it's not positive. There's nothing positive come out of any of the yen news. So yen's still weak. So again, if you're going to try and mean revert this, just be careful. They probably and possibly doing a liquidity run, in which case then you might get some drop on it. More likely to be the Aussie drop than the yen strengthen though. So I would rather wait for this to drop and start looking for long opportunities somewhere down here. We just really don't have any bias on the yen that is strong enough to say, yeah, I want to short this. If we get a push up to this level here, somewhere around there, so basically ADR today, that's probably a good ADR reversal, because if they've taken this liquidity and they've reached for all the liquidity up here at ADR 125, 100 to 125, we're probably going to get a profit take move. Unlikely to be a reversal, maybe, but it should at least be a profit take move down to these highs. So you've potentially got a move of somewhere in the region of 60 to 90 pips to the downside, which is roughly an ADR. So there's a potential for a short on the Aussie yen this morning. It's already extended on the hourly. If it can get up to ADR, that would be worth a short potentially. But again, it's a risky one. It's a scalp short just down to here. Personally, I just rather do that. I'm not interested personally myself in taking anything risky at the moment because I want to protect my earnings this month. But if you are wanting to get into more positions, you know, that's still got a very high probability of working. The only other thing we've got extended is the pound odd on the hourlies. I'm short the pound. It's coming down. So it's not something I want to take as a long personally. You know, it's a short for me. So I'm not really interested in longing it from down here. Just taking the liquidity at the lows here, but it doesn't seem to be reversing. So this next 4 hours after this candle closes, if we go bullish there, potentially that's the start of a pullback, but the pullback could only be into this accumulation, this area of balance there. Very difficult. We could get a nice big strong push, but that's going to require the Aussie to dump. So don't know if they will be doing a liquidity run there or whether this is just kind of, the pound is really not doing very well at the moment. So anything that powers up like the Aussie is just going to batter it down. I've got the pound New Zealand on the short. Oh, not on that account, on the other account. Which is kind of the same sort of trade. So I'm looking for that one to drop today. But yeah, so pound New Zealand extended on the hourly. Sorry, pound odd extended on the hourly. But bit of a risky long. You know, these can easily work. And look at where your 5-minute reversal is. If you want to take the 5-minute reversal on it, you're going to get the alert as that candle comes back up above support in the 4 hour. So the alert is actually going to be when that candle closes. So either that candle is going to close, give you the alert as a hammer, in which case that's a nice reversal pattern, or this is going to close bearish, and then we're going to put in a bullish close, which is a bullish engulfing, which is bullish. So either way, if you get the M5 reversal alert, it's a good chance of that working. How far it's going to go though, difficult to tell. You know, when you've got a bearish currency, you may just get that nice propulsion gap there to aim for as well. So they might just do the propulsion gap and drop. Who knows? But yeah, pound odd, there's a potential opportunity there. It is counter trend though. 4 hours, all we've got is the Aussie New Zealand, which is extended to the upside. That's really extended on the 4 hour now. So we're getting up to weekly range on Aussie Swiss just been hit. Something else is going into profit, which is balancing out the drawdown. Oh no, I've just taken another loss. There we go. That's why. So 1.3, 4.99. This is basically stop out, 5%. Oh, hang on, it's loss on a day, isn't it? Does it take into account floating? Confused.com. Surely that should be stopping out now, shouldn't it? Ah, no, look, the max drawdown today, is 2197 at the moment. So I've got 2.5. So I've actually got $300 spare at the minute in the game. What have I stopped out on? US dollar Swiss. So one of those Aussie Swisses has closed because it's hit its max. It's hit its loss target and closed out US dollar Swiss in profit. So just going to drag that aggressive position up. Now we've hit ADR. So this is a nice reach for the Asian high. So if we now go bearish engulfing and drop, I'm going to get in a second position there. And I'll move my third. Oops. Up under there. So we'll be getting in one there, one that's live, and then the second one under that low. That will bring the average up very, very nicely. See what happens. Morning, Hank. So yeah, Aussie New Zealand obviously is still going. So we're up to 75 extension now. We're just about to trigger on the 80 at the end of this candle if it stays where it is and it keeps going the way it's going. So again, Aussie New Zealand, up to you. For me, it's counter trend. You know, I've been looking for longs on this thing since here. I've been longing this and longing it and longing it. That's what I want to continue to do. I don't want really to mean revert it because this is a huge long. The Aussie and the New Zealand's relationship, the Aussie is always the bigger economy, always the stronger economy, unless there is some fundamental news which makes one stronger than the other, and it tends to be based on minerals and any kind of fundamental to do with mining. So this for me is a long. I don't want to be mean reverting it, but equally when something gets that extended, think of the elastic band. Yeah, that's really extended. That's going to snap back. How far it's going to snap back, don't know, but it's definitely due a profit take. DAX coming down, yeah. DAX is coming down nicely. So reversal, I'm going to get in the position on that as well. So H4 wise, that's it. Aussie dollar New Zealand. The only other things we've got are the daily extensions, which we've got the Euro Swiss. Where's the Euro Swiss there? So this is a really nice short Euro Swiss. You know, it's extended to the downside. I'm not longing it. Lovely short opportunity on the Euro Swiss where it is at the moment. We've just pulled straight up into that resistance. Yesterday we pulled back off of it after the big strong push. Everybody got short, put their stops up there. This morning they've come and grabbed everybody's money and they're going to run with it. So whether they're going to go here or here, don't know. So it could be an ADR hit today on this one as they come down and go for this gap. But difficult to tell which way they're going to go. Long term, obviously I'm looking for shorts on it, and I have been for a long time. Euro Swiss, it's just a big old short. Trying to get into it is very hard. So this to me looks like a pretty good entry short. I'm in Euro New Zealand short at the moment. I'm not looking to add any more Euro exposure really. I don't want to get overexposed on it. But I've got one on my Euro New Zealand. The Euro, there was talk about yesterday, the Euro increasing rate. I don't know where it came from. It was yesterday morning. I'm not sure we're going to go back that far. Yeah, here it is. So traders price in 1 point of ECB hikes by October for the first time. So what we've been saying with the euro is the euro basically has had zero interest rates for absolutely ages, 6 years or something, maybe even longer, I can't remember. But it's been basically at zero for ages because the economy's been shot. It got hit by COVID as it was struggling, and that's really, really battered it. So the euro's been dropping like a stone, as we know. What they needed to do as inflation has started to rise, which is making it even worse for them, on top of all the problems they've got, inflation starting to rise, they needed to hike interest rates and hike them fast. It's going to hurt the population, but it needs to be done to get on top of inflation. So what did they do? Put a 0.25 and put a 0.5 on it, which doesn't do anything. The Swiss franc, on the other hand, went immediately straight up to 0.7. They were like, I'm not mucking about with this. And what happened to the Swiss franc? It went through the roof and through the moon, and it does still do the same thing. So, you know, the interest rates are a measurement of how serious a government and a bank is about sorting out their financial issues and getting on top of inflation. ECB has not been doing that. So where this has come from, I'm not 100% sure, but it is red news, so it's kind of come from somewhere partially important. I wouldn't be surprised if over the Jackson Hole Symposium over the next 3 days, we get something coming out of the ECB and Lagarde about this. But if they decide, actually, yeah, we're going to put interest rates up by 1% the euro is going to start to get some strength. So I don't want to overexpose myself on the euro, because there is a possibility we may well start to see a little bit of strength coming through. It's not going to go, you know, you're not just going to get this completely go crazy, but what you will see is this gradual decline that we've had across all euro pairs starting to level out, and it will start to bottom out, and it will start to what we call, you know, a rounded bottom. We will start to see that kind of price action. So you'll get a reversal alert, which will put in market structure shift, and then all of a sudden we'll get a new high and new low, and then we'll get a new high, and you'll see this gradual decline that we've had just bottom out and start to reverse. And it will probably happen with a massive spike and a pullback into that, and then a pop on the rate announcement, or it will be a push and then an accumulation and a push, and we'll have a whacking great propulsion gap left behind. So we'll see. At the moment, it's speculation. There's nothing confirmed. But if they are going to do that, it is going to be bullish euro. How bullish? Difficult to tell. But what we don't want to be doing is overexposing ourselves on something that might be starting to turn. So I've got the Euro New Zealand short on at the moment. I really like Euro Swiss as a short at the moment because the Swiss franc is strong. But if the euro strengthens, I don't really want to get stuck in a slow squeeze on something. So I've just been a little overcautious on it. If we get extended on the euro to the upside, without having that rate announcement, then yeah, I will be sure I'll be getting in short. So I'm still, you know, until we get confirmation from the European Central Bank that they are going to do something more dramatic with interest rates, it's business as usual. This is coming down. If she dumps a 0.25 or a 0.5% increase this month, it's not going to do anything next month. But we will see. So just be aware of that. Things are starting to get really bad from an energy perspective. Our bills are going up ridiculously. The cost of oil and the cost of everything is, as we've seen, has been dropping gradually, but that is is expected to rise. So all of this is just going to increase that inflation curve. It's going to get faster and harder. And when you get to a certain point in inflation, you start to then have other things cascading around you. So where at the moment we've had housing prices increase in the UK, for example, year on year, month on month for a long, long time, that's starting to flatten out. If inflation gets to a point where people cannot now afford the mortgages because interest rates have gone up so much they can't afford their mortgage, inflation's gone up so much that their bills now are bigger than their incomes, what do they have to do? Sell their properties. What happens when people sell properties? There's a lot more supply in the market than there is demand for people to buy houses. What happens? Housing prices collapse. What does that do? Drive up inflation. It all becomes this spiraling mess where everything gets really, really bad really fast, which is what we call the recession, and the market collapses that we have. So it's all, everything's kind of teetering, and it's such a fine balance. And it only takes one currency to start to really kick in and go, right, okay, we're going to get on top of this, and everybody else will have to start to follow. Because if somebody else's currency inflates dramatically quickly and yours isn't, you're getting worse off. So you have to follow suit. You have to do something to reinvigorate your currency. So long-winded way of saying, just be a bit careful with the euro moving forward over the next 3 or 4 weeks. I just want to see what news comes out about it. So keep your eyes on what's going on with the euro, especially the next 3 days, because we've got the Jackson Hole symposium. It's a lot of banking talk goes on. So it's the economic policy symposium, basically. So it's all the central bankers getting together, having a piss up, letting all their secrets slip. You get the odd bit of movement. All of a sudden, you'll get a bit of red news coming in, and stuff moves. So can be a bit volatile, but just be aware. So that's it really on the 4 hours. There's nothing else there. So there's not really a lot to look at this morning. If anybody's got anything else they want to have a look at in any detail, let me know. DAX double topped. Aussie Swiss is pulling back off the highs. So taking the Asian high out in London. So potentially we've got a 3-bar reversal forming. So we'll see how this 15-minute candle closes. If we get a bearish candle there, that could be the flush start. So that might be where we start to move from. Let's see. Interesting difference in brokers. I've hit ADR on Traders Global Group, which is this broker. I haven't hit ADR on Forex. Shows you how different brokers are. Look at the price action on the overnight here. Yeah. And look at the price action . That doesn't line up, does it? That's the wrong chart. 15-minute. Okay. Look at the price action difference. Yeah. So there's the price action on Traders Global. There's the price action on Forex. Who do you think is the better broker? Who would you want to be in bed with when that sort of thing happens at night? Broker manipulation. Difference between an ADR hit and not an ADR hit. Criminal, isn't it? Aren't they naughty? So they spread the market by 21 pips. Forex spread it by 4. 16 pip difference. So that isn't an ADR hit at the moment. For me, anyway. I'm not paying attention to this. This is not a real broker. Well, they are a real broker. They're not a real respected broker. I'd never heard of them until I joined my Forex funds. The EA got me into EU while you were talking about being careful with the euro. I don't worry. I mean, I'm still bearish on the euro. So yeah, I like Euro US and short. I like Euro Swiss short. I like this a lot. This Euro Swiss. If I wasn't in the Euro New Zealand, I would be jumping all over this. I'm just and this is, I keep trying to explain this situation with everybody's comfort zones and everything. I'm not taking it because I've got 22% in the bank this month. That's the reason I'm not taking Euro Swiss short now. I think that's a beautiful entry, and I'm pretty sure you are going to get an ADR hit on that today. The only reason I'm not taking it is because I've got exposure on the euro and I've got exposure on the Swiss at the moment twice. So if I do this, I'm going to take a third exposure long on the Swiss, and I've got 22% in the bank. If I had 6% in the bank, I'd probably be thinking I'm overexposed on it, but my God, that looks good. I'll be taking it. Yeah. So this is what I say, you know, when do you do drawdown control? When you're comfortable, when you're uncomfortable, when you feel I need to do drawdown control is when you do it. It's different for everybody. I can get to 10 to 15% before I start thinking about drawdown control. Other people in the Telegram group are like, I'm in 2% of drawdown. Should I start drawdown control? If you're uncomfortable, do it. If you're uncomfortable in 2%, do it. If you like this trade, take it. Yeah. It's not about the trades you take. Like I said, you can flip a coin and go long and short on something. You've got a 50-50 shot of it working. How you manage it after you hit that button. If you hit that button now and this thing goes like that, how you manage this position after that is what makes you the money. Not whether it goes down now or up now. That's irrelevant. You've got no control over that. If you like it, take it. Same with the Euro US. I think it's a short. Euro's coming down. That's a beautiful rejection of that propulsion gap. Look at that. Accumulate, drop. Push back up. Everybody that made that drop happen, stepping in, adding to their positions and making it drop further. Yeah, I love it. They're both really good shorts. Just all I'm saying is someone somewhere has said something about potentially something happening. In my experience, when that something is said, there's usually a good reason for it. People just don't make crap up for the sake of it. Someone's heard something somewhere that potentially Lagarde is going to increase interest rates higher than expected. They will probably come out with a forecast of 0.5, but what they might do is put a 0.75 or a 1 in instead of a 0.5. If that happens, you're the wrong side of the euro, you could be the wrong side of the euro for a couple of weeks. You know, so it's just I've got no reason to be aggressive at the minute. I've got much more reason to be cautious at the moment. I've got good exposure. I'm happy with my exposure, so I'm not going to go crazy. Odd CAD, first entry. We've just had the reverse alert on M5. First short. Blackstone. I haven't covered the indices yet, have I? The indices. Which broker did the manipulation? That was my Forex funds, which is Traders Global Group Incorporated. That's the other problem with prop firms, is you can't choose the broker. There's one prop firm out there, I can't remember which one it is, but they use a broker, and I did an evaluation with them, and the execution time from me hitting that button to my trade being placed was anything up to 10 seconds, and I was scalping the DAX. It was just unacceptable. They didn't give you a choice on brokers. You had to use the broker that prop firm. I think it wasn't Trader Central. It was one of the other ones. There's two that have got the word traders in. It's not Trader Central. It's something else. It's something 8. There's a broker called something 8. 8 cap. If you ever see any, I can't spell 8. 8 cap. If you ever see any prop firm that uses 8 cap as a broker, run a mile. The execution time on this broker is unbelievably shocking. Unusable. You can't use. You literally look at that fast execution. I can't remember the prop firm that uses them, but any prop firm you see that uses 8 cap, disappear. Awful. Absolutely hideous. But yeah, that was on my Forex funds, that one. My weekly ADR has the odds Swiss at 150.4 for the week. The difference is the manipulation, yeah. Well, I remember when I was nervous at 2% drawdown. Now it just feels like a Thursday, yeah. It's funny how it changes. The problem is, yeah, when you're switching from the normal stop loss mindset into a position trading mindset, your mindset is focused on that 1% loss or that 0.5% loss, because you're so used to risking 1% or 0.5% per trade, or some people 2% a trade. When you see this hit 2%, it's a failure. I think your mind is programmed. It's a failure. You're 2% drawdown. It's all going right. It's all going wrong. I've lost, because you're focused and taught that losing this is the norm. It's not. Yeah. So, and going back to what I said yesterday, if you've got a strategy which has a 50% strike rate, and you take 100 trades, you're going to get a losing run of somewhere between 6 to 10 trades. Yeah, I know it's going to happen. There is no strategy in the world with a 50% strike rate that isn't at some point going to have a losing run of 6 to 10 trades. It's just the way it works. You're just going to have a period where every bearish engulfing goes the other way for a day, and you take 5 entries and they all cock up, and that's it. That, if you're risking 1%, you're going to lose 6 to 10% of your account in one day or 1 week, or however many times it takes to take those 6 to 10 trades. So what's the problem with being in 6 to 10% of drawdown? No different to losing it, except you haven't lost anything. That's the massive difference, and that's the mindset shift you need to make. When you go into 2% drawdown, you haven't lost anything. Look at last week. What was I in last week? 10, 11%? Yeah. One day, I went from being 10 to 11% in drawdown to banking, what was it, 4 or 5% in a day, and having a positive balance. One day. I hadn't lost anything. I was just sitting in drawdown, and that's what my account is here for. This money is sitting here to be used as a risk in the market. So why lose 6 to 10%? It does make sense, obviously. But the problem is, when you lose that 6 to 10%, you've now got to get that 6 to 10% back, and it makes you go crazy aggressive and start doubling your contract sizes, and then you get another run of 3 losing trades. So you actually lose, instead of 3%, you lose 6%. Now you're 16% down. Christ, what are you going to do? How are you going to dig yourself out of that? It's just a nightmare. Death by 1,000 cuts. But yeah. RSI should be applied to the close. Yes. Oh, sorry. Well, no. Moving averages are applied to the close. I apply my RSI to the median. You can choose though. I mean, the median and the close. If you look at, there's the median there. There's the close. It's the same pretty much, but you see how it's flattened out a little bit more. The median is a little bit looser. The reason I use the median is because this is the closest to the TDI, which is the indicator that a lot of people use. A lot of people trade with the TDI, and the TDI is based on the RSI, and it's based on the median RSI rather than the close RSI. But to be honest, it does make a lot of difference. Like I say, whether you use the median, the close, the open, whatever, whether you get in there or there is irrelevant. Yeah, you're going to get in short. Whether you get in there or there, it doesn't matter, does it? We're playing a position. We're playing the fact that they're going to push and pull the market. Whether you get in there or there is the difference between having 2 positions on and making a profit, or having 1 position on and making a profit. Yes, it will affect your drawdown, At the end of the day, it's not really going to massively affect your P&L long term, whether you use the close or the medium or the open or what. Use a stochastic if you want, or a CCI, doesn't matter. It's an oscillator. It's telling you that the market is extended. The reason I like the RSI is because it measures the relative strength between two currencies, which I'm on the DAX, which makes sense. But it's measuring the relative strength between the two currencies, whereas the CCI and the stochastic are measuring a different thing. This is more to do with strength and volume than the other oscillators, which is why I prefer it. And it's slower. You stick a stochastic on it, and the stochastic will do that. So you'll have signal after signal after signal. Stochastic's way too fast. CCI I found way too slow, and it flattens out too much. But all we're looking for is a condition. We're looking for this to tell us that the market is in a certain condition where we should potentially analyze it and start looking for an opportunity to get in. Doesn't mean we get in. It just means this is what the RSI dashes are for. They're to alert me to a condition so I can go and have a look and think, right, are we at a level that looks good? Is my bias short? Should I be looking for a reverse alert to take a trade? And this is the first thing that I look for is the market to be extended, stretched like an elastic band, so that I know that there's a profit take move potentially on the cards. Whether it happens or not, obviously, is down to the market. US dollar Swiss isn't letting me out, is it? My original TP was here, just below the Asian low. So if it does that, and then that, I'm going to be crossed today. I'm going to watch it at yesterday's low. In fact, I'm going to put an alert on yesterday's low, just to remind me to have a look at it. And I'll probably put a trading stop on it at yesterday's low when we get down there. Just in case they sweep yesterday's low, and if they don't take me out, I'll be crawling up the walls because I need to bank something. I'm not used to having red. Don't like it. Ruins my aesthetic. The IFO Business Climate News has just come out, 88.5 on a forecast of 86.8. That's negative euro. Not that it does much off of that. I don't tend to get much movement off of the IFO. It's just the news. 88.5. Oh, hang on, sorry. 86. Read that wrong. Yeah, so it's positive euro. So the euro is coming down. Nothing makes sense. Euro threat is still stuck. Drawdown's holding okay at the moment. Pound New Zealand's helping me as well. So down to 5.63% now, so I'm going to have to do some work now, unfortunately. I've still got quite a few days left on this. Account started on 10th. So I've got until the 9th of September. So I've still got a week and a bit to work this and try and get this back up again. But it's annoying getting so close. We'll see what happens today. Pray to the Forex gods that Aussie Swiss comes down. Right, that's all I've got for you today. Not a lot else. I'll be looking to bank something hopefully today. US dollar Swiss is my main potential. In fact, what I'm going to do is when we get down to here, I'm going to get the alert at yesterday's low. What I will probably then do is stick a trailer on it because we'll be down at ADR. So there's a potential that we're just going to get stuck down at ADR, and there's going to be limit orders triggering there. There's going to be limit orders triggering there. So we're very likely to get a bounce off of ADR today. But what I might do if this triggers and gets a little bounce there, I might just move my stops down to 150 ADR and stick a trailer on it, because it's coming down quite hard and fast at the moment. So we may get some sustained moves. We might just slam straight through these, eat the lot and go. We'll see. But we certainly seem to have a pretty strong Swiss franc this morning. So really good moves on the Swiss franc. Unfortunately, the Aussie is also strong, which is holding Aussie Swiss up, which is why I can't get this thing down. So as soon as that Aussie dies and they stop pumping anything into the Aussie, that Swiss franc should take over and tank it. But by then, maybe the Swiss franc move will be over, and we'll see. I haven't done yet indices, have I? Or oil. That's not it for today. Just based on the DAX, is it possible to go for another, since it's currently at the highs made on the 22nd? Highs of the 22nd? The high of the 22nd is up here. There's a spike. Yeah, I mean, you could do. The DAX is a difficult call today, very difficult call today, because we've got these gaps, and then we've got this gap here. So it's we think of it. We're in a tug of war at the moment. Someone's going there. Someone wants to go there. It's not going anywhere at the minute. It's difficult. So yes, you could, but I'd be a bit wary about trying to get beyond this gap, because if you look at what we've had through this day, all this drop, every speculative short for the last 4 days on the drop hasn't taken profit yet. So it's more likely we're going to get some kind of pullback. And we've got a good reason to do that as well. So I'm kind of looking potentially for some longs at interim, but equally on the DAX we get this multi-day drop where we just collapse and come flushing down. But if you look, the norm is 3 to 5 day drops and then retracements. We're due, and it's starting to happen, isn't it? But those that retracement doesn't have to necessarily come back up here. We could just go straight from here and carry on down. We bounced out of the lows basically. So it's a tough one. If you're going to position trade it, just get in. If you feel comfortable getting in with a short, get in with a short. I'm in short, but I'm looking for a scalp today. I'm really tightening up at the minute because of the just want to protect the account. But equally, I'll scale into this. I'm going to make sure I don't scale in hard on it. So I'll be scaling in roughly an ADR. Might get in half an ADR. What I'll probably do is get in half an ADR, and then I'll get in on that gap, and then I'll ride the next wave down. But yeah, so DAX, obviously that's the analysis on the DAX really done. US indices. Oh, our friend's back. Our sexy site. Love chat 1.xyz. US indices, obviously we're looking to target pre-COVID. Yeah. Obviously recession looming. So next leg down, this is absolutely spot on where we'd be looking for it. I was calling it week before last, but we had one more push before the drop happened. So but yeah, the drops certainly started on the Nasdaq. So we've had those big down days. We've got a gap fill to do on the NAS. We've got a gap fill to do on the S&P. So it's very much in the same boat as the DAX. We've pulled back down into support, and now we're having our little bit of a pullback So looking for the market structure to shift to the downside. It could just accumulate, drop. It could pull back, drop. Don't know, obviously, but there is a gap. So there is a good chance that we are going to get a bit of bullish price action coming on the indices, which it seems to be doing today. So same thing really with these. That's the gap, which is at 125 ADR. S&P, aware of this, we may well get that push today and possibly tomorrow. But equally, you know, if the market has a scare, we get a risk off something, you know, GDP could well do that. We're going to get a dump. Oil, you know, keep saying it, 95 a barrel is where we are, and 95 a barrel is where we keep coming back to. On the way down, we stopped at 95, stopped at 95, stopped at 95, broke 95, came back to 95, back to 95. I'm looking for that break of 95, 95 to 97, which is hit. Oh, sorry, 95 to 97, which is these black lines I've got drawn. It's this one here and this one here. So this is the zone where we keep getting stuck. And in the past, this is where we keep reacting and bouncing around. So we're looking basically for a break above that 97 for confirmation that we are going bullish on oil. If not, we're coming back down again. At the moment, we are really stuck sideways. And this is what happened yesterday off of that news. We got that news where we were confused as hell, which is why I got out of the positions that I had down here. I'm happy to add them on again down here. Which is where I'll add a second position on if it gets down here. But you know, the real, I think, line in the sand with oil is 90. So if you look at the 90 level there, the psychological level down at 150 ADR, every time we've got down to this 90 level, we've kind of gone, nah, we don't like it. Nah, we don't like it. So the 90 to 95 is the base, and that is the pre-Ukraine level. That's Ukraine. This is 90, the 95 level here. So we're just teetering around this area at the moment, which is again a previous. One here, which is your 80, 85, 86. So you know, there's this zone here, there's this zone here, where we keep getting stuck. Yeah, so we're right in this area where it shouldn't drop below. If it drops below this level, there's something wrong. Something's changed with oil. The supply demand has changed, the price capping has changed, something's changed, but there's no reason for it to trade lower than this level. So as you can see, this is the level that we've been milking for the last few weeks, and I will continue to milk this level. So if it drops, I'll get in. If it drops further, I'll get in. If it drops further, I'll get in. But we should hold that level unless something fundamental shifts with oil. But equally, they're calling 150 a barrel in the next 12 months. So at some point, it is going to want to start a rally. This could be it. This could easily be us bottoming out and the rally starting here. If you look at this on the 4-hour chart, this is a beautiful W reversal. So yeah, it's really good for longs still, but whether it's going to go from here or not, I don't know. Yesterday confused the hell out of me and most people. What the hell that was, I don't know. It was bullish news, but it certainly didn't look bullish, did it? Odd. Right, okay, so that's it. That's everything covered. Gold I don't trade, but be looking for shorts on gold. Crypto I don't trade, be looking for shorts on crypto. That's it, apart from everything else. Aussie dollar Swiss, everybody cross your fingers. It's not sure, is it? It's really not sure this morning. It looks like it wants to come down, but every time it comes, it looks like it wants to come down. There's a lot of selling pressure coming in, which is good. I like it, the selling pressure. There's no buyers. You know, we're not, we pushed up Asia. We pulled back. We've rejected buyers. So every buyer that comes in is getting stomped on. So there's no more buyers in the market. Whether there's any sellers or not, that's what we need. We need some sellers. At the moment, they don't seem to be coming through either. So sideways. Okay, so have a good day, everybody. Be aware of GDP for the US at 1:30. Just be aware of the Jackson Hole. If you see anything spiking crazy, go and check out Financial Juice. You'll probably find it's something coming out of Jackson Hole. That sounds wrong, doesn't it? Something's coming out of Jackson's Hole. So just be aware of that. We may well get some talking heads talking loose-lipped about something. There's press conferences all the way through Jackson Hole as well, so the press will be poking. So just be aware. It's like a 3-day press conference, really. But other than that, we've got GDP to worry about, and that's it. And then we've got PCE tomorrow afternoon, and then obviously week is over. Pretty much month is over. I'm not here on Monday, obviously. It's bank holiday. Well, obviously, if you didn't know, it is a bank holiday in the UK. I'm not here on Monday. Heard it here first. We've still got a couple of weeks, a couple of days left next week at the end of the month. And we've got non-farm next week, but non-farm is obviously on Friday. But we've got CPI figures and stuff coming out next week. So we get a lot of manipulation in the last couple of days of the month, usually because the banks and institutions are trying to balance their books and get to profit targets for the quarterly and monthly reporting figures. So Monday, Tuesday next week, Monday, Tuesday and Wednesday really, but Tuesday, Wednesday mainly, I would expect to see some decent volatility and movement. So we might get some nice midweek reversals next week, but we'll see. All right, I'll update you on progress. Drawdown's coming down at the moment, which is good. We've got one going into profit. Dun, dun, dun. So I'll update you on anything that I close out today. Mainly going to be US dollar Swiss based today. But I'll update you on what happens with my Forex funds as well in the Telegram group. Back tomorrow morning, 7:50, same time. But if you need anything, come in the Telegram group. I will be around all day. But other than that, hopefully you have a good one. And yeah, I will see you in the morning.